Hi everyone, it's Elise Livingston at the Fairfax at Sunset. I am here at the property. I'll turn it around so you can see the living room here. Ooh, I love this space. And we are here to talk finance. And we are going to shortly be joined by our expert at US Bank, our partner, Zack Cervantes. So give me 1 second and I'll add him in. Hold on. So Zack is joining as we speak. Hi, Zack.
Hey guys,
How are you?
good. How are you doing?
I am having trouble hearing you. Hold on 1 second.
Is
Let me
that
just settings.
is that better?
Uh-oh. Can you hear me?
Yeah, I can hear you clearly.
This is a technical difficulty. So give me 1 moment here. I'm not really sure what to do.
There you are.
Okay, Zack, can you hear me now?
Yes, I can hear you.
Okay, sorry guys. Sorry for that little snafu right there. But I am happy to have Zack here and happy to talk finance and mortgages.
Yes.
And it's a crazy time for all of us. So thanks for your patience, everyone. So we have been working together, Zack, now almost 2 years,
Yeah,
right?
yeah. Time flies.
I know, on many new home projects with our developer RC Homes. And, US Bank, where Zack works, has been a fabulous partner. And again, we're at the Fairfax at Sunset. We are an 8-home, new home, small lot subdivision. And Zack is our preferred partner lender at US Bank. So just tell us a little bit about yourself, Zack, and your background, and then we'll talk money.
Sure. So I'm with US Bank. I've been here probably about 10 years. I've been in lending for about 20 and always spent it in new home construction. I always found it so much more fun and interesting to see the new homes and see them develop from start to finish and put the home buyers in it. So I've always done new construction and always kind of played in the same space. So lending is just really a cool passion of mine, and it's always fun.
Yeah, and you've been great to work with. So just so everyone knows, in terms of our partnership with US Bank and the projects that we've done, this is our third project together. US Bank, we never require anyone to use our preferred lender. Everyone who's buying a home can always choose a lender of their choice. We do ask that everyone's finances are run by US Bank just as a cross qualification, which is a really normal thing in any home buying process. But our buyers actually have gravitated towards US Bank. And I would say, Zack, wouldn't you say about half the buyers in both projects ended up going with US Bank?
Yeah, we've been doing about 50% of them, which is good. I mean, we're here to help and explain to everyone how it works. New construction is a little different than resale. So we're here to
Right.
help, guide everyone through the process. And luckily about half the people have trusted us with that.
Yes, and it always makes things easier sometimes too to be with the preferred lender because you're so familiar with the project. We usually have weekly calls back and forth about updates on the project, so they're able to navigate the process for the buyer much more easily than an outside lender.
Yeah, being familiar with it, knowing, keeping the closing on time, and we know the timelines, we know the difficulties sometimes builders have. and the difficulties lenders have. So when we have a partnership, we actually iron all that out and make the closing a lot smoother than your average partnership or average lender.
Yeah, totally agree. So let's talk Fairfax. So
Yes.
again, everyone who's just joining, we are at the Fairfax at Sunset. I'm Elise Livingston. I'm one of the sales people here for the home project. It's on the border of West Hollywood and Hollywood on Fairfax between Fountain and Sunset. There are 8 small lot homes here, so they're structurally independent, single family homes, and our prices range from 1,499,000 to 1,599,000, depending on the location on the site. And if some of the homes have backyards, so they're a little more expensive. So when Zach and I were talking about, some of the questions that we've been getting, we have 3 homes under contract already. We wanted to have this so we could share those, thoughts and questions that come up so often with buyers. So Zach, I'm going to turn it over to you to kind of give us an overview of, have you seen, where rates are now, and then sort of at the 1,499,000 price point, like what does that look like for a buyer right now? Say they're, I don't know what your down payments are right now, but kind of give us a viewpoint of, around 1.5 million, what that looks like.
Yeah, sure. So a lot of the questions we probably get on this is how much can I put down? What can I really get into this home with? And what's it going to cost? And realistically, at this price point, you're most likely putting somewhere between 20 to 15 to 20% down, really, to get in there. The rates are still really amazingly low. I mean, we're locking 30-year fixed rates at 3.25%. So what that does is it provides you a really low payment that's probably very comparable to renting in that area. I mean, on a 1.5 home, you can realistically own it with 15% down and a payment of about $6,700. Now, that may seem like a lot, but it is the payment that includes your taxes, your insurance, your maintenance fee. It includes everything that the home ownership will cost, everything you spend monthly on that home.
So what in our industry, we call it the PITI.
Yes.
Because I always have home buyers say, what is that? What are you talking about? What is this PITI?
Yeah, so the PITI, your total payment. So it's really just shortened. The P is for your principal and interest, the PI, principal and interest, which is your basic mortgage payment. If you choose to just make that every month, you can make just a principal and interest payment every month, and that's pretty easy. Then some people decide to add their taxes and insurance in with the payment. So what that means is we take your annual taxes, let's say it's $12,000, we divide it by 12, and then we collect $1,000 every month with your payment. It's like a savings account. And then we'll make your tax payment and insurance payment at the end of the year for you.
And the annual tax payment is typically 1.25%.
1.25% of your sales price. So in this particular project, it's about $19,000.
Mm-hmm. So you can do that twice a year or include it in your, monthly.
Yeah, correct. You're not forced to pay it every month. A lot of clients like it because it makes their payment easier, and they know that they don't have to save to pay, a big, $10,000 in December and another 10 in March. And putting it all together in one payment makes it a lot easier every month.
Right, absolutely. So sort of just to recap, in case you've just joined, Zach was just talking about around a $1.5 million price point, everything included, all your taxes, all your insurance, your principal, your interest would be around $6,700 a month for a 2,100 square foot single family home, brand new, with 3 bedrooms. It has 3.5 bathrooms, a rooftop deck with a fire pit, a 2-car garage. And in West Hollywood, as we know, to get that type of home to rent, it would be about from what I normally see is about $2,000 more about a month for that type of home. So rather than rent, you can build your, equity in a property.
Yeah, and your home equity, I mean, that's big. I mean, to build wealth or to grow versus renting. I mean, even though we're in an economic time where everyone's wondering where are housing prices going, where are rates going, what's going on with everything. There's still a shortage of homes in LA, and it's going to probably keep prices up. And, a recession doesn't always mean a housing crisis. I mean, this isn't the same thing that happened in 2008 at all. So I think the market, once we open back up, it's going to start moving forward and start roaring to new highs again.
Yeah, agreed. And I think, we've already seen it picking up as you and I had spoken to. Buyers are out. There's a shortage of homes. We actually have seen a lot of people that are, in closer quarters in condos and, apartment buildings and wanting maybe a little more space and separation from, other people. And
Yeah.
LA is still big destination. I mean, I just read an article about how they figured out New Yorkers are coming in droves now. Um, to Los Angeles. They started tracking them to see where they were quarantining, and LA is quite popular. So, I think in the long term, LA is always a good investment, especially
Yeah.
where we are. I mean, we're walking distance to, the Sunset Strip, to the comedy clubs, the bars, the nightclubs. Once all that comes back, which it will, Chateau Marmont, you
Yeah.
know,
And you also have something that's disappearing in LA, and that's off-street parking.
yes, yeah, the two-car garage.
Yeah.
We have a two-car garage, exactly. Yeah. So it's a huge plus. And I think I told you this stack that we've made it now a gated community.
Oh, good. Yeah, that's neat.
Yeah, so we will have a private driveway gate, so all the homes, will be even that much better than having your own garage.
Yeah.
Um, so we talked about the PITI. So in terms of the rates, like where for a 30-year fix, what are we looking at right now?
On a 30-year fixed for a purchase loan, we're locking somewhere between 3.125 and 3.25. Now, of
Wow.
course, that's your perfect scenario. Everything's going to be based on your FICO and your own personal qualifications. But I mean, we may get down to an even 3%. I mean, rates have been trending down. They are, of course, being held artificially low by the Fed, but it's helping everyone out, and it's helping the purchase market, it's helping the refi market, it's helping us all kind of keep afloat and keep closing deals and making good deals for your buyers, and it's not always just rate driven. I've done the math on it, and if rates go up a half a point, it's going to reduce your buying power about $100,000. So if you wait, you're going to, and rates do go up when the market picks back up, then you're going to have 100,000 and less buying power than you do now with the rates where they're at.
Right. So you're gaining right now $100,000. So people who kind of are saying like, oh, maybe I'll wait. Really, right now, you're going to be able to get more.
Yeah, correct, exactly. And your payment's going to be almost identical.
Yeah, that's true. Um, so in terms of other advantages for this community, so for a single family home in West Hollywood, there's all these other kind of possibilities for purchasing. So for instance, I know you guys have a program where parents can actually buy these for their grown children and still consider it a primary residence. Can you tell us a little more about that?
Yeah, correct. So the parents can buy it for the children, or vice versa. The children can buy it for the parents, and we consider it a primary home. So if you guys have been thinking of, bringing your parents closer to you, or your parents are bringing you over to go to college or to study or film school, whatever you're doing,
Right.
then yeah, they can purchase it and consider it a primary home, which is going to get you the good rate, and they're going to build equity while you're going to school, or you bring your parents over and you build equity while they live there, and are a lot closer to you.
Right, right. And, with that, just sort of so everyone kind of understands why we're saying that is when you buy an investment property, as an investment property, your rates are typically higher and your down payment's higher than primary residence.
Correct. Yes. If you were to buy an investment property at this price point, you're putting most likely about 50% down to keep your loan amount in the 700s, and your rate's going to be somewhere in the low fours. So it's about a whole percentage point difference, and a large down payment to keep it as an investment property, to start as an investment property.
Right. So, so what would be the down payment if it was a just straight investment property?
On a
Like
straight
around,
investment property, our loan amount would max out at about 765. So you'd be putting about 50% down.
oh wow, okay. Okay,
Yeah.
it's a lot.
So big difference.
Yeah, that's a huge difference.
Yeah.
And, you know, I think the other thing with single family in Los Angeles is, you know, if you buy it as a primary residence and it's single family, it's like you could rent it out later.
Yeah, correct. We have a requirement. It has to be a primary for a year.
Mhm.
That's the rule. And after that year, then you're allowed to turn it into a rental, and that's a great area for it. I mean, you've got the Airbnb that's going to become popular again. You're in the perfect area for that. And then rentals are big in that neighborhood as well.
Yeah, yeah, exactly. So, and just so, I mean, what I've seen again, so say your payment is, you know, 6,500, 6,700 a month, then you could rent it out for over 8,000 a month, you know.
Oh yeah. Most likely, yeah.
And we even have, you know, a few units with, you know, separate entrances, you know, for guests or, you know, short term, you know, or even, you know, having like a roommate with their own entrance. So that's kind of a nice thing.
Yeah, and
Is-
that's perfect. I mean, having your own private entrance when you
Yeah.
have a roommate situation is perfect.
Yeah. So if somebody did buy it as their primary residence and then they decided to, you know, have that private entrance for a renter, can they write off that as income? If
In certain situations, we would allow the border income, the
Mhm.
rental income to be used. So
Mhm.
it's most likely on a case by case and their situation and living in that type of, with a roommate in the past. And if they've historically always lived with a roommate, it's possible that we could be using that income to qualify.
Interesting. That's really helpful for I think a lot of people, you know, right now. Certainly, you know, people have been looking at this as like they could even have their office there. And I know even if you have a home office, especially right now
Yeah.
with the work from home, is that another thing you could look at? Maybe just from a tax perspective, you can write it
Yeah,
off.
the home office is more of a tax perspective thing where you can write some stuff off, maybe save a little bit of money on taxes. It's not really something that the lenders really that we look at as far as like income or expense.
Right. Okay. Okay. Well, it's still at the Fairfax at Sunset, it's a great work from home situation, I think.
Yes. Oh, and you've got the rooftop deck as well. I mean, who
Having a
wouldn't
roof
love to work on the rooftop every day?
to go near anybody, and you can pull in your own garage. You have so the layouts of the homes are, you know, there's the first floor has a bedroom down there with the garage, two car, you know, direct entry garage. Two of the back homes actually have a separate entrance, two through back gates to that bottom bedroom, and then the living's in the middle where I am now.
Yeah.
And dining, and then two bedrooms upstairs, and then the rooftop deck with you can put a TV out there. You can hook up media, speakers, the works, and we have the fire pit, which you know,
Yeah.
is so you know even on the
That's almost an LA necessity on a rooftop.
I know, I mean definitely the best part of that, and the units all have a west facing perspective, some better than others, and you can see the sunset
That's
from
amazing.
all around. I mean, really, I think it's the best of the projects we've been working on for sure.
Yeah, I'd agree. Yeah, it's a great project.
Yeah. So, so in terms of what we've talked about so far, we talked about, you know, the PITI, we've talked about where rates are. I mean, I don't know about you, but my feeling is I think rates are going to continue to stay low and, you know, for a bit. And I think that, you know, we're still going to be in a strong situation for buyers for long-term ownership here.
Yeah, definitely. I mean, the estimates we see from our economist is definitely the second quarter. It will hopefully be on the road to recovery, and the low rates should continue. We don't think they're going to drop that much lower, but at least remain where they're at for the foreseeable future right now, for this year. And hopefully that keeps the economy going and keeps buyers out there. And I think
Yeah.
once everyone can actually go out and leave the homes and start visiting the homes again, we'll see the activity pick up really quick.
Well, we are now allowed by the city of Los Angeles to do showings.
Oh, good. So we're back in business.
Has been picking up, and they are allowing, I think, two people to go into a home and at a time. Oh, we have a question here from Shelley, and she asked, can you share any insight into folks in the creative community who might not be W-2?
The non W-2 clients are underwritten as self-employed, of course, and we underwrite the tax return. So a lot of times I get the question, or clients who believe they don't qualify, and that's the first thing is, I don't qualify, I'm self-employed. Well, we're the experts on that, I guess you could say. So what I always recommend is, let me look at your tax returns. You're great at advertising, you're great at your creative portion of it. Let me take care of the financial portion of it, and then I'll underwrite it, and I'll give you an idea of what you qualify for, or maybe what you could do to qualify for the home in the short term or in the near future.
Well, and you guys have different programs. So for instance, I know like the 10-1 arm can always be a great option.
Yeah, I mean, you could do an ARM to lower your payment a little bit. So we do have other programs where you qualify for a lower payment that's not going to change. It's not going to put you in a bad situation, but it can put you in a home now that you can carry the debt on for the next 5 to 10 years, and then decide if that's your home or not. I mean, this could be your entry-level home. It could be your lifetime home. We don't know until, you decide. I mean, the average homeowner keeps a home or mortgage for about 7 years. So an ARM is never a bad thing or a downside to purchasing a home.
Right. So, so can you just explain what an ARM is for people?
So what an ARM is traditionally your rate's fixed for 30 years, and you pick a mortgage that has a 30-year fixed rate, and you're set. And you're going to make that level of payment for the next 30 years. On an ARM, what we do, it's a shorter term rate, so your rate's going to be a lot different. On a 10-1 ARM, we're down as low as 2.625 right now, 2.5. So what that does is it drops your payment by about $500 a month. Mm-hmm. And that allows you to maybe qualify for a home you wouldn't otherwise qualify for. Now, we're not putting you into a home you're not going to be able to pay for, because you're qualified at a higher payment a little bit. Mm-hmm. And then it is fixed for 10 years. So 10 years is enough time to withstand any kind of economic downturn. As we've seen this past 10-year cycle, it was about 10 years, and then we had low rates. So you'd refi again, or you'd purchase and you'd move on, or you convert it to a rental. But 10 years is a good time frame.
Yeah, I totally agree. And LA, as we've seen from the last kind of 2008 to now, I mean, we would never even have imagined that the prices could have increased the way that they did over that period of time.
Yeah, no, prices always kind of keep moving forward. We always think, oh, the prices can't go any higher. Well, they have, and they do every time. It's always on the graph is always going up.
Yeah, totally. So with the 10-1 ARM, is there any sort of difference in down payment? I'm not sure.
No, the down payment's going to be the same. We're still going to do the 15-20% down. And yeah, the only difference is the interest rate, and you're going to get a lower payment.
And then before that 10 years, you either sell the property, you refi, you can rent it out.
Mm-hmm. Whatever you want to do with it. There's no prepayment penalty, no balloon. There's no tricks up anyone's sleeve. It's just a normal 10 years. It's fixed for 10 years. And after those 10 years, you can keep the mortgage, and your rate's going to be variable. So, or you could just refinance, pay it off, you know, sell it, do whatever you wanted with it.
Right, right. So that, you know, to save $500 a month, I mean, how much more in buying power does that give you?
That'll give you about 100,000. So if you were qualified for about 1.4, you could get the bigger unit at the 1.5 for the same payment, and you just move down to a 10-1 arm.
Right. So just to kind of recap where we've been, this is Elise Livingston at the Fairfax at Sunset, a small lot subdivision project here in West Hollywood. This is Zack Cervantes. He is our preferred partner at US Bank and has represented on the projects that we do in the new home space. US Bank has represented about 50% of the buyers that we work with. And again, we don't force anyone to work with our lender. We only ask that they cross qualify with our lender to ensure for our owner and our seller that the buyers are qualified. So in that, speaking with Zach and his team, who is Marie and Katie, they have so much confidence in them and the programs that they've been offering that they have chosen them even over other lenders. So
yeah,
it's a fantastic partnership. And
it's a pleasure.
Our first Instagram live here together.
Yes, I know. It's my first ever, period. So this is fun.
Yeah, well, it's only my third, and I've never done an interview, so I'm just,
hey,
yeah.
We're getting used to the new normal, which is good.
The new normal, and yeah, and I'm just not having to homeschool right now, so I'm just going to keep talking and talking and talking. But we thank you for being here today, Zach.
Thanks for having me.
Yeah, and so just again, the prices here at the Fairfax at Sunset range from $1,499,000 to $1,599,000. The homes are 2,100 square feet, approximately, with 3 bedrooms, 3.5 bathrooms, and they have rooftop decks with fire pits, where you will find Zach and I, when this is all over, having a glass of champagne to celebrate. They have 2-car garages, direct access, electric charger capable. They're prepped for electric vehicle chargers. And the homes have smart home automation. I mean, they are fantastic. And they're located on Fairfax between Sunset Boulevard and Fountain Avenue. And there was a question earlier about where we can walk to from here. I mean, in quarantine, and we can walk about a block to the north and you're at Bristol Farms. And there's a huge Rite Aid there as well. And then to the south is Whole Foods. And then if you walk 2 blocks north, you're at the Sunsets, 2 blocks northwest, you're at the Sunset Strip, Chateau Marmont, Laugh Factory, Saddle Ranch, lots of amazing spots that I cannot wait to go back to.
As soon as they open up.
I can't wait. But at least from your rooftop deck, you can watch the sunset over this amazing spot. So always reach out to me, everyone, if you need information, to reach Zach, to even find out if you can qualify for a home here at the Fairfax at Sunset, at hello@fairfaxatsunset.com. And thanks for joining us.
Hey, thank you. Thank you, everyone. Thanks for having me, Elise.
Yeah, have a great week. I'm sure I'll talk to you the next day, Zach. So. Okay.
Bye.